we were chatting before this video, you mentioned that you bought a stock last March and it's massively up already. Thought process behind that, why that stock, and then how much is the gain right now?
Okay, so in March, I was doing a little bit of research, keeping up with the market, and I came across this company called Inseego. It is a 5G company. So aside from tech, I also focus a lot on 5G. I personally think that it is obviously going to be the future. There's a lot of potential in 5G. In 2019, I opened up my Ericsson, my Nokia positions, and some other companies that focus in the 5G sector. And so in 2020, I focused on maybe adding 1 or 2 more stocks. So far I've added 1 5G stock in 2020, and it was this Inseego stock. And it is a company based out of San Diego, California. And it's a small company, but there is a lot of things they're working on to help supply chain companies in particular transition to the 5G and like improve processes. And so as someone who works for obviously Tesla, there's a lot of operations, heavy industrial things that we have to track. And I felt that this company could potentially in the future, maybe 5-10 years from now, be one of those big players that helps multinational companies transition and just solidify their 5G processes. And so I just gave it a shot. Initially, it was a speculative position. I didn't invest more than $3,000. Next thing you know, I ended up doubling my money.
Guys, in this video, we have Wendy Gonzalez. She's an employee with Tesla, but at the same time, she's also investing in the stock market. So I want to drill in, Wendy, on number 1, as an employee, why did you start investing? And then what triggered you, what motivated you to start your journey? Because a lot of people your age, let's face it, they're not investing, they're not saving, they're mostly spending money. So
correct.
What kickstarted your journey?
You know, I am an employee and I do work for probably one of the most innovative and transformative auto technology companies in the world. There is job security there. I have built a solid career working at Tesla for about 5 years now. But, you know, even though I have a great job, a great role, I really think that you have to think of the bigger picture. You never know what can happen to you, whether it's to your family members or to you personally. And although I have job security, I really feel that I can take control of my personal wealth, personal finances by making the money that I currently have saved and have that money actually work for me in the background when I'm not even paying attention. And so I was really fascinated by the idea of multiplying my money in a very fast, I say fast in the quoted word because it's technically not fast, but in a much faster way than saving money. And so that's why investing really caught my attention. And even though I'm pretty young, I'm still learning all of the different ways you can invest. And right now, the long-term investing approach is working for me really well because I can buy quality companies and I can hold for minimum 1 year, 3 or 5, and then sell and take my profit. So I'm really working on building a portfolio that's going to be able to, I guess, really cater to my lifestyle down the road and just have a little bit more security.
Here's what's interesting. There's so many investments out there, from Forex trading, you can go cryptocurrencies, you can go bonds. Why the stock market?
Because for me, I am 25 years old. And one, I am not ready to really make an investment in real estate, for example. There's just a lot of things that are moving in my life, a lot of things that can happen. And so I don't want to commit to becoming a real estate investor just yet, maybe down the road. And one of the reasons why I decided to invest in actual security, such as companies versus cryptocurrency or focusing on Forex, is because I felt, because I'm new in the market, I feel much more confident in investing in companies that I've heard about, that I know, that I interact with on a daily basis. And so I felt more confident putting my hard-earned money into companies that I am familiar with.
Okay, you mentioned that you're investing for 2 years already. How was it like for your first trade? What was the thought process?
Very scary. It was very scary, you know. The process, you know, the process leading to my first buy, my first stock that I bought, it took several months. I knew that I particularly invest in AMD, which I'm sure you know about. It's one of the best like semiconductor producers out there. I knew that I wanted to invest in tech and in AMD, and I really tracked this stock for maybe like 2 months. And when I initially placed my buy, the stock actually went down and I freaked out and I was like, oh, what did I do? Did I mess up? Like, what's going on? But honestly, it was more of me getting into adjusting to the fluctuations that take place in the market and understanding that that's part of investing. Tomorrow it's going to be up. The next day it could be down. You never know what can happen. But what kept me secure and I guess positive was knowing that I wasn't going to profit off this stock tomorrow. It was going to be a long-term approach. And so in the end, I knew that I was going to make some type of money, and I was hopefully aiming to make a little bit, but a year later, I've doubled my money with AMD. And so I was not expecting that. And, the market has taught me a lot about patience and really understanding the different trends. I'm learning and I'm trying to track my progress at the same time. So work in progress.
I have a question on top of that. So when you started, for example, if this is your allotted amount to invest in the stock market, did you place everything in that one single trade? How did it go? How did you size it? And then second question in line with that, when it started to drop, did you just wait or did you add some more? What was the thought process in that?
I said I'm going to invest $10,000. That was my maximum at that time. I'm like, okay, I'm going to take $10,000 from my savings. I'm going to put it into my brokerage account, and then I'm going to buy companies that I feel comfortable with. And so in AMD specifically, I invested initially $2,500. I said, I don't want to do more than that because what if there's another opportunity out there that I want to take advantage of, or what if I feel comfortable investing in something else? So what I tried to do is break down the $10,000 into even quantity so that I can essentially build some decent positions in some of these companies. And I started off investing in the tech sector because I'm a tech employee and I know about the tech industry. And so I felt much more comfortable like investing in Facebook and Microsoft and AMD because I know about these companies. And I started small. And then initially when I saw the AMD price drop, I did freak out for a little and I did miss the opportunity of averaging down. I should have done that. But I learned that with time. If you really believe in a company, if the company has good financials, good fundamentals, a strong business moat, then it makes sense for you to average down by adding more during the drops because you know it's going to be a solid investment. But when I first started, I didn't know what to do. But I learned that from experience, from trial and error.
So 2,500. After that, it dropped. You just held on to your position. You mentioned a lot of things about the fundamentals, about moat. When offline, you were telling me that you'd spend a lot of time looking at the balance sheets of companies. Are there any items in the balance sheet that you look for that when you see that, this is a good company? And the reason why I'm asking this because there's a lot of people who don't know where to start when they look at the balance sheet. There's so much.
It's complicated.
What made it simple for you, and what are the things that you look for that stands out for you when you look at balance sheets?
There's a lot of information in a balance sheet. Every balance sheet kind of looks different to an extent, but it all has the same information: the debt, the profit, and how the cash on the sideline. And so what I actually look for is the debt. How much debt does this company have in comparison to the cash on the sidelines? And then I try, obviously, because I'm not an expert, I'm still relatively new to the market. From there, I take that information that I find, those numbers, and I start doing my research online, looking at blogs, looking at Zacks.com, looking at Morningstar, and trying to get other professionals' opinion about this company based off what I receive. So I really try to look at the debt, and I try to look at any, acquisitions that they've had and how that could potentially help or hinder the success of the company down the road. So there's really a lot of things you can take away from a balance sheet, but for me, the most important thing, and something that I learned off from the beginning, was looking at the debt, because that's crucial for essentially expansion for these companies, for overall profits down the road.
If you could segment it based on what you researched, can you remember the worst companies with bad debts and then the top ones with manageable debts also?
From my tech positions, they're all doing well, but they all have some type of healthy debt. Like Facebook has that, but it seems like they still have enough cash on the sidelines and profits coming in to really balance things off. To give you an example of the company that's doing the worst in my portfolio, it is a cannabis stock, actually. I don't know if you're familiar with what's going on in the United States and in Canada, but cannabis stocks were hot in 2018 and 2019. There was a lot of bull movements in the market with cannabis, and I invested in Aurora Cannabis, and I bought in at $9, and now it's a penny stock. So and the issue there is I did not look at the financials so much like I am doing now, and I didn't realize that that particular company had a tremendous amount of debt because of all the acquisitions they had, and they just didn't have enough cash on the sidelines. And that was my biggest lesson moving forward, that I have to look at the debt and the profit to really figure out if it makes sense to invest in a particular company.
Did you put the same amount with AMD for this same position?
No, I did 1,500. I mean, it's still, because it was from the beginning, that particular MJ stock was a speculative buy for me. I knew that I wanted to taste what it would be like to invest in MJ sector, and so I didn't put too much, but I still wanted to put enough just in case it went up, then I could obviously cash out and call it a day. But I was completely wrong, and I still haven't sold my position. Actually, I'm holding it. At this point, it doesn't make sense for me to sell at a loss. I think there's still some potential regulation, and lawmakers can change certain things in the United States and in Canada that can help the overall MJ sector go back up. But obviously now we have this whole health crisis, and that's impacting every sector that we know of. So I'm just gonna hold. I'm gonna forget that I have it, but it was definitely one of the best lessons that I've encountered so far during my investing journey, of really looking at the balance sheet and doing my research and not just basing it off the hype. Especially as someone who does a lot of content on YouTube and Instagram, there's so much hype around certain companies, and people just think that because someone invested in that company that you should invest too, but you really need to do your own research. And that's one of the things that I try to share with my audience. Like, even though I invested in XYZ, you still need to do your research, and you need to take ownership, because it's your hard-earned money that you're trying to grow, and you need to be an adult in that aspect.
Yep, because that's the most important thing for everyone watching. Whatever gets said in whatever YouTube channel, you have to do your due diligence, because it's your money. No one will protect your money more than you do. Use those channels as a reference, as something that will help you analyze. But at the end of the day, it's you pressing that buy or sell button. It's your decision. It's your money. So if you make a mistake, you live and die by your mistake. You don't blame other people as well with mistakes that you make. But here's my question on top of that. At what point you figured out that, hey, this company had a lot of bad debt? How much of a percentage were you losing already at that time? And when you found out at that time that it was already that bad, what pushed you to hold on still, knowing that you already saw this is not as good as what I wanted it to be, versus selling right there at that moment?
Because it was a speculative position, I didn't put too much attention into it, and that was my mistake. But I didn't find out about it reaching bankruptcy until I saw the headline come on my phone, because I have notifications. Yeah, I have notifications through Yahoo Finance of all the stocks that I have. And I knew for a while that the stock was not doing well. It kept going down every single day, but I didn't understand the bigger picture of what was happening in the background. And the CEO left the company. Then they realized, then they actually almost filed for bankruptcy. It was about to get delisted from the New York Stock Exchange. And I didn't find this out by looking at the balance sheet initially. I got it from actual market reports and alerts. And that's when I looked into the balance sheet for the previous quarter, and I was like, oh my God, how did I not pay attention to this? I should have maybe sold earlier when it was going down, but I was still able to take a little bit of my money back, but I just didn't pay attention. And that's one of the things that I think people need to understand. When you do speculative positions, regardless if you don't think that something bad can happen, you still need to keep track of that position, because you never know what can happen.
Okay, great answer. And for those watching, I hope you don't just look at people's success, you look at the learnings behind the success, because people will never reach a certain position without also the mistakes that are in between. So you started that, you invested $10,000 US dollars. then you started to make some money, you started to lose money, then you started to diversify. Did you ever add to that position, or whatever you were earning, you just rolled that over and used that to buy more stocks?
I actually rolled most of my money over to this year. So at the beginning of 2020, I did cash in some profits when the market was doing extremely well, which was like January. We saw like all-time highs in the US market. I'm like, okay, now is my time to maybe take a little bit of profit, not take the entire thing, because those would be short-term gains, and I don't want to be so in the United States, when you take profits less than a year, you're taxed at a higher tax bracket, considered a short-term gain. And I didn't want to be taxed significantly, because obviously I still have my income from my job that puts me at a particular tax bracket, plus the income from investing, it puts me way up high. That means that I actually won't be taking home as much profit if I cash out everything. So what I did in 2020, at the beginning in January, I did cash out on a few positions that were already significantly small, just to like balance things out. But then I actually, once we hit March, I ended up putting most of that money back into the market. So I kind of evened it out, because even though I cashed out, I never actually took the money out of my brokerage account. I just kept it sitting in the sidelines, ready to buy at the right opportunity. And never did I think that we were going to be in this crazy COVID situation that has obviously opened the doors for a lot of investors like ourselves to really buy quality companies at lower prices that we haven't seen in a long time.
You mentioned at the start that you were a long-term investor.
Yeah.
But what caused you to take profits probably a year into the game? What are your rules for selling? And the reason why I ask this also is that it's easy to buy. Sometimes it's harder to sell.
Yeah.
If you don't have rules on how you are selling that stock, it would be hard. So what were your rules for selling?
To answer the first part of your question, it was fear that made me want to take some profit out, because the market was doing extremely well. I'm like, this is not normal. Why is the market extremely like at all-time highs? What is happening behind the scenes? Obviously, we know the Fed in the United States is printing money, but I'm like, this does not seem right, and I'd rather just take something just in case, we have like a 2020 recession, which obviously we're not in a full recession, but we're in a crazy economic time. But yeah, it was fear that made me want to sell just a little portion. Normally, like I told you, I am a long-term investor. I want to at least hold for 1 year because of the tax implications. I don't want to be taxed significantly higher, because that technically means that my profits are going to be less. Now, if I keep most of my stocks in there for a year, then when I actually sell, I am taxed at a regular rate, which is obviously better. So normally my rule is at least keep it for 1 year, but obviously I would like to keep it for 3 to 5 years, probably continue investing until after I finish business school, then reevaluate my investment portfolio, see how much debt I have from going to business school, and maybe using some of that to pay for it, because I don't want to live a life of debt. So that's why I'm trying my best to invest as much as I can right now, build really a solid portfolio of growth stocks and dividend stocks, so a combination of two, to really be able to reap the rewards in 3 to 5 years.
So I've been investing for more than a decade now. So when the market dropped last March, there wasn't emotions in my end. How did it feel from your end, seeing markets drop massively fast? And at that time, everyone was so excited about the US markets. Oh, the trade war is going to an end. And then suddenly you saw the rug got pulled under you. How did it feel? Did you think about buying the cheapest stock quickly? Or did you think that, I think I should shore up on cash first because I don't know what's going to happen?
So to be very honest with you, I was so happy because for the longest time, in 2019, like the second half of 2019, I didn't get to buy a lot of the quality companies I wanted to because they were overvalued, they were overpriced. I really didn't have a lot of cash purchasing power. So I've had some cash on the sidelines, and yeah, there was a fear of, okay, I should maybe keep that cash in case, what if I get furloughed? What if I get laid off from work because of what's going on? But at the same time, I knew that during crazy sell-off periods, this is where people get rich, or in a sense where people are able to build a bigger portfolio in the long run. And so I took that as a shopping spree moment for me, and I went all in. I definitely bought more of like quality companies like AMD, Facebook, Microsoft, a lot of the tech companies. I added more, I averaged down. And then I started opening a lot of positions in oil because I've been wanting to really invest in the energy sector. But all of 2019, oil stocks were at really, really high. And now with this whole crazy health crisis, oil has been at all-time lows. And I'm like, that's my time. It's my time to get in, make some, get some oil stocks, get some of those dividend paying oil stocks and build from there. So I really took that opportunity, that risk, that excitement, and I used it to really do my research and open up some new positions as well.
That's so interesting because everyone at that time was saying, stay in cash, stay in the sidelines, fight another day, don't catch a falling knife.
I caught a falling knife with my MJ stock. so going back to that experience, but I think, I try to follow the Warren Buffett investing method, right? He buys when people sell, right? Fear versus greed. And because I'm young, I'm 25, I feel like there's a lot of risk that I can take right now because technically speaking, I am not planning to retire in 10 years, 20 years. I'm going to retire in 40 plus years. So for me, or 40 years. So for me, it makes sense to just jump in right now. I don't have kids. I don't have major responsibilities. Sure, I have to pay rent, then I have my car expenses and other stuff, but I've position my savings and other stuff to cover that in case of an emergency. And so whatever I have left over, I really focus on taking those risks in the market because I know they're going to pay off down the road.
You mentioned that you started with 10,000. When the markets dropped in March, did you add to that 10,000, got from your savings and put some more, or whatever profits you had from the previous ones, that's the one you placed back in?
I opened up my portfolio with 10K, and then towards the second half of 2019, I added an additional $5,000, okay? And I just bought more stocks. I diversified a little bit. So I had, let's say, 15K. My portfolio at the end of 2019 ended up with a 64% year-to-date growth, which is impressive for a new beginner, for a new investor. I was like, I don't know how that happened. Obviously, it was a little bit of luck. And also the market was just doing really, really well in 2019. So I don't want to take the credit for all of it. It was good timing. From there, in March, I added an additional 20K. So I actually took from my savings because most of my money that I've had it in a high interest savings account. So I'm like, you know what? This money is not earning me enough interest. I'm just going to take 20, put it in there, and let's go and play. And let's go and make bigger positions and average down. And so right now my account is worth a little bit over 50. So I've been able to build it to 50K in just 2 years. But building it has been a little bit scary because of the volatility in the market. But at the same time, I try to remind myself, it's not for tomorrow's gain. It's for 2, 3, 5 years down the road when I'll be able to really see how I did, how these investments played out.
While we were chatting before this video, you mentioned that you bought a stock last March and it's massively up already. Thought process behind that, why that stock, and then how much is the gain right now?
Okay, so in March, I was doing a little bit of research, keeping up with the market, and I came across this company called Inseego. It is a 5G company. So aside from tech, I also focus a lot on 5G. I personally think that it is obviously going to be the future. There's a lot of potential in 5G. In 2019, I opened up my Ericsson, my Nokia positions, and some other companies that focus in the 5G sector. And so in 2020, I focused on maybe adding 1 or 2 more stocks. So far I've added 1 5G stock in 2020, and it was this Inseego stock. And it is a company based out of San Diego, California. And it's a small company, but there is a lot of things they're working on to help supply chain companies in particular transition to the 5G and like improve processes. And so as someone who works for obviously Tesla, there's a lot of operations, heavy industrial things that we have to track. And I felt that this company could potentially in the future, maybe 5-10 years from now, be one of those big players that helps multinational companies transition and just solidify their 5G processes. And so I just gave it a shot. Initially, it was a speculative position. I didn't invest more than $3,000. Next thing you know, I ended up doubling my money. And I did not expect that, It's like, I feel like, yeah, like sometimes you just have to play a little bit with the market, dip your toes in and see how it goes. You never want to go full in because you could lose your money, but I think there's always a little bit of risk that you should take and just keep everything controlled.
At 50,000, how many stocks do you recommend people to have? How many companies? Because the problem is if you buy too much, the gains might not be effective for you, and it's hard to watch a lot of companies. So, your opinion, your take, 50,000. What's the minimum number of stocks that you should have, and at least the maximum for that amount of money?
Yeah, so I think for 50, anywhere definitely under 10 stocks. I think personally, that is one manageable for anyone to track less than 10 stocks. You can really put all your attention into understanding the companies you're investing in. The problem is when people get 20 plus stocks, they get them because they know the company, but then they can't spend the time into tracking how they're doing because it's just too much, like you mentioned. So I say anything under 10 is good for like a 50K portfolio. And you really just want to, instead of buying more stocks with smaller amounts, you want to build bigger amounts because you know that over time, as you build bigger positions, the gains will be bigger as well. It's like compound interest. So you really want to focus your attention on 5 to 7 stocks potentially, and really build your portfolio off that. And then as the market shifts, as things change, rebalance your portfolio, maybe cash out of a particular position, maybe add a new one that is up and coming that could see bigger gains. So I think definitely under 10.
Just a few more questions before we put this to an end. You're an employee, then you're investing, then you're doing YouTube. A lot of people don't want to invest because they think it takes a lot of their time, or it's a stock market, I have to watch it every day. I don't have the time to watch it every minute. What's your word of encouragement to people who are so scared of investing, but it's not actually fear, it's actually an excuse that they're not trying to take the time to learn? Because when you know it already. It doesn't really, you don't really have to watch the ticker every single minute to make money. So any words of encouragement for employees, especially for millennials, where it's not really, the biggest mistake of millennials is not buying the wrong stock. The biggest mistake of millennials is spending everything on stuff they don't actually need.
I think that you first have to be motivated. Like, I think people who invest in the market, naturally there's someone who gravitates towards how can I make more money? And I know that sounds very shallow, but in the reality of things, like, your paycheck, you're limited by how much you earn, right? Your paycheck is X, Y, and Z, and it's gonna stay like that until you get your next promotion or your next pay increase. The only way you can make more money is if you invest in it. It doesn't have to be in the stock market, but in this video, we're talking about the stock market, but you can invest it in a business. You can invest it in the real estate. So you really, if you have that mindset of becoming some type of entrepreneur, or you just want to better yourself, then you're gonna have to invest in some way, shape, or form, whether it's through education, whether it's through the market, whatever it is. And so I think when it comes to investing in the market specifically, you don't necessarily need to look at your phone or be listening to the market from 8 a.m. to 4 p.m. during trading hours. You just need to have a clear goal of what it is you want to get out of the market. Do you want to make quick money? Or do you want to build something that will give you a payoff down the road? So depending on what it is you want and how much time you have, that will become a structure for your investing strategy. So for me, going back to my journey, I don't have too much time. Like you said, Marvin, I am trying to juggle like 5 different things. And for me, I don't look at the market every single day, but when I know that I want to invest something or that there's a potential buy, I use my time wisely to track that for maybe a couple days or a couple weeks before initiating the buy, but I only do it in sections. I don't just look at the market every single day. I just don't have time for that. And that's a great approach for long-term investors. But if you have time on your hands, you want to make quick money, or you want to make quick buys and profits, then obviously day trading is a great way for you to do that. But that requires a lot of work. You need to be trained in some way because you can't just say I'm a day trader today. It actually takes a lot of time and a lot of, technical analysis and things you have to, focus on to really make sure you make the right buys and sells, and like charting and all of these technical things. But yeah, as a long-term investor, it fits with my lifestyle where I just don't have time every single day to track things. But I know that when I'm ready, I can go and make time to understand what it is I want to invest.
So while you were saying that, I'm thinking about how people might respond to this. They might actually say that, she's working for Tesla. She has a lot of money to begin with to invest. So what's your comment on that for people who are not earning as much, who have limited savings? Could they still invest? Should they still invest also?
Okay, let's say you have, I don't know, I'm referring to the United States here. If you earn less than 50K a year, which in the United States, it's considered not so much, right? Everything is so expensive here. If you earn less than 50K a year and you have debt, then you shouldn't even think about investing yet. Personally, that's just my opinion. I don't think you should be thinking about investing. You should think about ways to pay off your debt, because the thing that's holding you back is debt and eliminating things in your life that you necessarily don't need. For example, me, I really keep my lifestyle very minimal. The only thing that's the biggest expense is where I live, because that's obviously, I live by myself, and but everything else I keep very minimal. I don't have too many subscriptions. I don't go out and buy Louis Vuitton bags or crazy stuff. I just try to really be frugal with the money that I have so I can maximize that in the market. So I think for anyone, regardless of your income, you need to have a frugal mentality. You're trying to build something for the long run, regardless of how much you earn, because that will really help you propel you forward versus holding you back because you're spending money on crazy things that you really don't need. Like, you don't need to go out and eat every single day. You can cook at home. Very simple things you can change in your life to really see extra money that you can then build in the market.
So here's a test for that. Do you buy in Starbucks every day?
No, I don't buy any. Actually, I stopped Starbucks probably like 2 years ago. Maybe I'll have one with my mom when she comes over. I'll take her out of Starbucks, but that's because it's my mom. But most of the time, I literally make my coffee here. There's like, I'm not gonna pay $3 for a medium-sized Starbucks. It doesn't make sense. I can buy, with $3, I can buy a full like packet of coffee that I can make at home.
Okay. Just to end, you're a long-term investor. People say that long-term investing does not work. Why do you believe it works? And what's your technique to make it work?
Yeah, so I think that long-term investing is not for everyone, first of all, because it really depends on your age, right? If you're in your 50s and you're trying to do long-term investing, I don't know how much you'll be able to make, profits out that, because you're so close to retirement. You don't really want to be playing with your money like that. And you should probably be investing in more bonds. But I think long-term investing does work because, one, a great example is Warren Buffett. I want to just mention it out there. He's one of the best well-known investors out there. And he obviously follows a long-term investing approach. And he has been building his portfolio for decades now. And he's 89 years old. Billionaire, one of the wealthiest persons in the United States, and all he does is long-term investing. So that's one of the greatest examples there. It works because it gives people the time to become, I don't want to say an expert, but to understand how the market works, right? Because when you're day trading, you need to be quick, right? You need to do things very, very fast. You need to be pretty much like the best of the best to make these trades and actually make money. When it comes to investing, you have a little bit of room to learn things, and as you learn things, you continue building from there, and your portfolio starts growing, because then you start making smarter investments, which is it's something that you can't really do with day trading, because it takes a certain level of expertise to get to that level. And so I think when you're starting off, if you don't know where to start, try the long-term investing approach and build from there. With time, you're going to get better at understanding companies, at looking at balance sheets, and then you're going to be multiplying your money even faster.
They just disclosed jobs reports, unemployment in the US, 30 million over the past few weeks. Where do you think the economy is going? And while all of these numbers are being disclosed, the stock market's still up.
It's up. I know. It's crazy. I don't get it. I don't get it either. One, I think it's because we know that the Federal Reserve in the United States keeps printing money. They keep printing money. They can do whatever they want. They've been printing a lot of money, and pretty much saturating the economy because of what's going on right now. I do think that the repercussions of this health crisis, we probably won't see it. It's like a wave. People, like, these companies have so much debt now. Okay, things are gonna start. There's gonna be probably another like reset, sell-off situation take place, and yeah, it's a little confusing of what's going on right now. I don't understand either, but I think that the effects of this will happen. Either if it's not in 2020, like the last quarter of 2020, probably sometime in 2021. But I think that the reality is the U.S. economy, or in all different various economies, we're all going to be impacted by this health crisis regardless. Despite the market being up because it's being, you know, fueled by positive headlines of bailouts and, you know, companies opening up to start business again, that's all news. There's still going to be detrimental effects to the U.S. economy.
There's a lot of people right now because of what's going on. We just talked about people who lost jobs. There are a lot of businesses that are shut down globally. There are a lot of people losing money also on their investments.
Yeah.
Any words of encouragement for them?
So I think if you're losing money right now in the market, first, you should take time to evaluate why it is that your company is not doing so well. Because believe it or not, in my particular example, more than 90% of my positions are in the green right now. So if something is in the red, like some of my other stocks, you really have to understand, okay, this is a good indicator that this company might not have the strongest balance sheet. So you have to go back into earnings or do some research and understand why these companies are being impacted so much. Are they cyclical companies? Are they companies that perhaps just are on a smaller cap size or not getting us enough funding? Like, really understand what is potentially, besides the coronavirus situation, what is really impacting their potential to not be in the green, if that makes sense. So really take this time to analyze those stocks in the red, look at their fundamentals, their financials, and then assess if it makes sense to you to hold or potentially to cut your losses at this point, move on and buy other positions. You really have to take that time.
Amazing. So I hope you guys are learning from this. If you are, put a like, put a thumbs up, if you have any questions from this, put them in the comment section and we'll try to make more videos on top of this. If you're learning from Wendy, comment "I want Wendy," so she appreciates all your comments as well. So Wendy, you have a YouTube channel. Can you tell people more about it? I'll put the link in the description, but go ahead.
Yeah. So I do have a YouTube channel. I've been on the platform for about 8 months, so it's very new. And I really, honestly, my goal on YouTube is not to talk about each trade that I have, but more to be a motivation for women and for millennials in general, mostly for women. I am a woman of color. I'm a minority in the United States. Believe it or not, there's a lot of things that I struggle with just being a Latina. And I really want to motivate a lot more women of color to think about investing. Investing is a great opportunity to help your future self. And so I just want to share my experience. I'm very transparent with my earnings in terms of my portfolio, and I just share that with you to somehow inspire you to think about investing. So if you're interested in that type of content, it's not technical analysis, it's not crazy diving into a stock, but it's more of just sharing my experience, then you can find that by going to youtube.com/investedmillennial.
Yeah, you can unsubscribe to me, just all transfer to her. It's so, yeah.
No, Marvin, you have some great content here. I love the fact that you connect with so many different people and like you're able to share different perspectives, and that's something that people find valuable because there's so many different types of people and different people want different content. So I think that what you're doing here is a great way for people to get everything in one channel. So props.
Amazing. Thank you so much for being part of the vlog, and I hope that whatever you got from Wendy is something that will also help you, because at the end of the day, the whole goal of this, the whole narrative of why we make videos like this is that people deserve to have a better life. And I really believe that the stock market is one of the greatest ways for you to be able to grow wealth over the long term, that it's an asset. But similar to anything else, it's skill-based. You have to build your skill. You have to grow your skill. It's not get rich quick, it's get rich right. It's about you learning the process on how you can find a strategy that will work for you. So that's it for now. Thank you, Wendy, and to everyone. I hope this video helps you do well, trade strong,
My dog says hi.
Hi to you dog as well. See you all again soon, guys. God bless.
Bye, guys. Good luck.